Hello, everyone. All right, so today is just going to be a recap of some things that I've been thinking about lately. It's going to involve certain trades that I played, certain themes that I'm interested in going into uh, the latter part of the year. Um, Also going to look at a setup that I'm starting to build more and more data on. And finally, a bit of research about liquidity because I've been helping a small $20 million fund uh, on their liquid part of the portfolio. And I just thought let's throw it out there because I find that super important. So if that interests you, you can like and subscribe for the algo. Anyway, let's start. So, a research piece I wrote um, was my bullishness for the Trump token. So this is part two. I haven't published it yet, and but I still wanted to kind of cover it because I don't know when I'll post it. But something that's worth mentioning is that my thesis has evolved. So let's get into it so you know what I mean. So first off, the origination of my bullishness was when I noticed that the word crypto, Bitcoin, Ethereum seemed to be super correlated with the price. Like it was very accurate in, showing when the market would top, stuff like that. Not on the like lower time frames, but I was more looking on like weekly data. So like if you just look at Google Trends like over a single day and try to predict where the price is going to go, like I have no clue what's happening on that time frame. But, looking at research, that was just one example. You could see like the analysis was done for Google Trend using vector autoregression and the price of Bitcoin, and the results show that there's a very strong correlation. So I thought, something that's super correlated is Trump during the election. The election is coming. As time goes on, the more we'll hear about him. And so hopefully the Trump meme coins are going to perform significantly well. And, just meme in general, have been doing super well, right? Like above any other category, right? And if you look at the Google Trends for certain categories, you can see meme coin is the one people search the most. And it's also by far the best performer. And so it's kind of reinforcing that kind of correlation, right? If you look here, that's a data I picked up myself using Python. And ultimately, like when Trump was mentioning, that's the yellow line, the Google Trends being bullish on crypto, the price of MAGA kind of spiked near that time. Like you can see series of higher highs. Um, Not the best chart, but like at that time, that's all I had. So, you know, I I still find the reasoning compelling, but here's why I kind of feel less confident about that thesis. Um, it's because the price of Trump tokens like haven't done anything. They've been basically selling off the entire summer, but the Trump assassination attempt created Google search interest spike. That's near what we saw at the peak of the election. That's in November, right? And in November, like, um, it, the price of I think there was Trump tokens back then. Uh, Actually, I'm not. I'm gonna stop talking here because I think I'm getting mixed up with other data. But anyway, prices spiked, not seeing a move. Sure, retail is not back, and winter time is when the elections are, and it also happens with uh, the projected increase in liquidity as well as like being seasonally when crypto performs best. And so you like there's a lot going on for like even though this we saw this spike when it spikes again during election time, the price also spikes. But I still find that very concerning that you see such a big spike and no price response, right? So my thesis, my kind of confidence in the overall thesis has been shaken out. I'm still watching the category, but I just don't know anymore what I'll be doing. Um, so that's for the Trump trade. Uh, Another thing I wanted to look at is all my prior couple weeks trades that got me shaken out and that got me basically not to suffer any losses during the recent uh, Japanese trade unwound, combined with increased geopolitical risk and all stuff like that, that created a big sell-off. So you can see here, that's for Coinbase, try to buy the breakout, but got stopped out. Then, nasty retrace, not involved. Same thing with, and I'm just kind of showing you that because I'm trying to get you familiar with my processes. Eventually, I won't be mentioning it as much. So this is like not a breakout per se, but it's kind of a like super massive downward consolidation, and then like you get, a big green candle. So like it's breaking out, and it's kind of a more of a bottoming breakout pattern, where you could still draw like some imaginary like flaggy looking consolidation, Um, there you go. So I still find that interesting. Then when we break that pattern, like there's a big buying opportunity, and I was kind of late to this one because it was super volatile, but I still ended up buying at this level because there was still another flag formed on a lower time frame. And because I just accepted to use the new platform and I'm not familiar with it, like I don't know how to go further back so you see my flag, see it's no longer there, but essentially like there was a consolidation. I was still extremely bullish because I had a longer term thesis with the Bitcoin mining category, and so I just wanted in. I'm kind of um, still thinking about whether it was the good thing because so this kind of like buying of um, uh, like this kind of chasing of breakouts when you see another consolidation is a strategy that I uh, heard about from one of the main SMB guy, not Bellafury or Steve Spencer, I believe his name is, but less experienced, but still veterans that are very successful. And that's what they do when they see a big breakout. They don't necessarily go do sympathy play. They just try to pay up on the higher time frame. So like they kind of chase here because they missed it. But then if they see a level that they can trade out of and have tight risk, because they're expecting continuation in the move, they still get in and end up like making a massive return. So when I got here, I wasn't risking much, and I still, I was able to trade, get out of it like near break even. Well, yeah, break even. But my thesis was that like we could see a move like this after like so much consolidation. And it was also post having like I won't get into it too much, but I was extremely bullish. Uh, and I thought this was going to be one of the big move. It wasn't. But that's also another reason why, like, I was like, I kind of have to pay up, because it could be like this pattern over here. So consolidation, breakout, but we don't really revisit. Or, like, you have to get in, try. Like, you can definitely get like shaken out here, but if you get such a big move and your risk is very small, then like maybe it's kind of worth trying because you can have like a 20% win rate and you'll probably still make a shit ton of money if you catch that move. So anyway, that's for that trade. Another flag that I kind of paid up, got shaken out. This one though, like I had poor stop execution, and I'm investigating more and more on that because I just feel like I should never lose any type of money. Uh, and this one, like it's, again, like this one, I still can't see it clearly, but like there was no reason to not to break to stop out at break even on this one. And finally, clear stream, another flag. Breaking out, buying the breakout, getting stopped out, collapsing. So I'm pretty happy. I mean, I entered like near 19, and now, it's back at like nearly 9 at some point, and maybe this is going to retrace. So, maybe it could get down to this level or this level, who knows? But I'm just happy to have saved uh, myself from such a big collapse, and now I can get entries that just getting back here could give me 100% return, right? More or less. So that's about it for the Bitcoin mining trade that I'm still gonna try to play later this year. It's gonna be, I think, one of my main trades on the equity side because it's aligned with my expertise, which is crypto, and I feel like there's good coverage online for me to make decisions on YouTube. Like these names are being covered, they're liquid, and the slippage oftentimes is not too crazy. Transaction costs not too crazy either. So it's kind of fitting over, I feel like, overall with like what I feel most comfortable with. So yeah, all right. Now another trade like on the pure crypto side is uh, the Solana Killer. I think the meme coins, like it's such a huge opportunity. This bull run, probably my main one. But if there's another one, it's probably going to be the Solana Killer. And the whole thesis is well covered by influencers. Everyone is going to try to play it. And I think even if like it's a consensus trade, it's still kind of likely to play out because retail uh, are still going to be looking at um, influencers uh, on trade ideas, and I'm just hearing over and over this trade. So something that could make it not play out is if like there's no traction on these Solana Killer L1s, or if there's like too many better themes that pop out, and I'll be covering them most likely in my channel. But if it does play out, I think we could see like from a 10x to a 200x maybe or more. And I think 10x is extremely conservative, and the reason is the Solana was the Ethereum killer last cycle, so it was kind of the same trade. And Solana was down 90% after spiking. So it's a bit like, for example, Sui is a Solana killer, was down like almost 80%. Now it spiked, but like, oh shit, fuck. Say was basically down, I think, 85% or 80%. Like I won't put it back here because I type super slow with my voice, but um, like all of these Solana killers are super low except Ton, which isn't really like a Solana killer. I guess you could say it is, but it's not exactly why I'm super bullish on this one. But yeah, like Solana, at a similar time than today, but prior cycle was down 90%, and then it went up 200% when the alt season started. And so you're seeing these names down a lot. Could they go down 90%? Maybe like Celestia, like down, almost 82%. Um, and so where could it go? Like, I think when the market gets crazy during alt season, like it maybe like do a 50x, 100x? Who knows? But I'll be there to try to catch some of these moves. So I just, like to purchase my things low. They're super low. I think these names are definitely going to get some good marketing going on. For example, Raul Pal from Real Vision. I think he's got 1 million followers. He's on the board of SUI. Everyone is just always talking about these Solana killers. So everyone's using Solana right now. Who's going to be getting a simple narrative boost um, when people are going to want to create FUD and say, like, yeah, you're super bullish Solana, but like, have you heard of SUI? And they're doing things Solana can do. And, they have a solid team. We were at Facebook on the project DM. So, you know, I think there's a lot of potential. So I'll be watching these names. Still going to be watching memes. Still going to be watching gaming. Um, Massively down 90%, right? So definitely going to try to like if these games that had good marketing uh, or these like gaming related projects that have good marketing continue to have good marketing, yeah, I think these are going to moon big and provide a multiple type return opportunity. But anyway, like I said, I was going to talk about Solana, so let's kind of leave the gaming and meme coin conversation for a later time. Um, so something, hold on, something I'd like to end with is just like this notion of increased liquidity. So this fund I'm helping right now as a consultant, I'm basically going to make a recommendation that they should pay attention to liquidity more so they have fixed income exposure. And as you can see, like when global liquidity, you could call it money printing and like an easing of monetary policy is going up, there's a massive correlation with risk assets. I think like the correlation is like 98% for Nasdaq, something crazy. And so why it's important? It's because the liquidity is kind of running into cycles that seems to go with election to a degree. And it's forecasted to go up significantly. And so if it goes up, means more liquidity, more debasement of assets in dollar terms, and so they go up, right? And so, for example, like there's a 6% average deficit going on, and sometimes people will say 8%. Like it's all about like how you calculate it. But ultimately, like this is creating inflation, and of course, like inflation is reported as the CPI, but it's also like it's a methodology, and this methodology evolved over time, and different people use different methodology, and sometimes that inflation estimate is as high as like 8%. And so, why am I saying this? I'm saying this because if you have fixed income exposure that earns 5, 6, 7, 8%, you're probably not really getting much ahead just because it's kind of not necessarily like a return that's above inflation. So in real terms, it's pretty much zero. And so I'm going to try to make that portfolio manager more aware and conscious of like how that fixed income allocation may not be creating the value that she think it does. And so I have a bunch of charts to show. And I'll even show like, look, if you divide the M2 money supply, which is the cash checking deposits, like all that kind of like liquidity injection type um, assets. And there's M3 and there's like other stuff that you could also add. But ultimately, like if you look at the capitalization of that M2 money supply, and you compare it to the MSCI US or the S&P, if you look at the ratio, like it's kind of not really going up, meaning you can interpret it as if you kind of normalize the return of the S&P uh, to the increase in money supply, like it's not really going much higher, meaning that it's not really generating enough revenue to get ahead. Um, so what am I gonna try to suggest with this is that it could be important for her to consider like higher risk assets if she wants to kind of generate portfolio value, because the debasement is basically going to like create a natural upward move for any asset class. And so um, diversification in a way is a little less interesting. And also, um, you know, then the question kind of becomes, how can I get high risk exposure so I protect my capital, but at the same time, like protect myself from the massive drawdowns that these higher risk assets lead to. And on that front, there's going to be like maybe some homework in terms of psychology, in terms of dollar cost averaging, or also in terms of like playing cycles, which is not recommended, but maybe that manager might want to start exploring, not like actually trading these cycles, but studying them, seeing is it something that could eventually fit with that manager's philosophy and personality. So, you know, things to be discussed. So that's it for today. I hope you enjoyed it. Uh, if you want more, you can like and subscribe. And yeah, like I'll see you on the next video.